Hello, and welcome to the Alternatives Investment Program Review. I'm Robert Lopez, Portfolio Manager at HoyleCohen. So what are alternative investments? Well, they're anything outside of the traditional stock and bond definition. These categories include hedge funds, private equity, venture capital, real estate, and private credit. Historically, HoyleCohen is focused on real estate and private credit, but most recently, we found new opportunities in the private equity category, and we continue to evaluate new investment categories for our platform. So why diversify with your portfolio with alternatives? Well, if we look at the chart on the right, and we look at a 60-40 portfolio, and we overlay a 30% allocation in alternatives, you'll see that the annualized volatility decreases and annualized total return increases on the margin. Same story goes for an 80-20 portfolio. If we put in a 30% allocation in alternatives, and that new total portfolio becomes 50% equities, 20% bonds, and 30% alts, annualized volatility decreases, and annualized return increases on the margin. So why is managerial selection so crucial? HoyleCohen allocates to alternative investments using third-party investment managers. If we look at the chart on the right, on the left part of that axis, you'll see U.S. global equities, U.S. global bonds, and U.S. core real estate. The difference or spread between a top quartile and bottom quartile manager is very tight, meaning if we were to select a manager out of any of these categories, we'd have a pretty good shot at hitting the median target return. Now, if we take a look at the right hand of that axis, in the alts category, the non-core real estate, private equity, venture, and hedge fund, the spread between a top quartile and bottom quartile manager is wide, meaning it's extremely difficult to select a high-performing quality manager in these categories, which is why it's extremely important that we take our time in selecting and improving the right manager. So what does our manager approval process look like? Well, first, we take on an initial meeting. This meeting's objective is to learn about the fund, learn about the strategy, manager's background, how long they've been running the fund, and any risk management that we need to take note of in this initial step. Next, we'll take a look at product fit. How does this product fit and investment strategy speak with our investment platform, our reporting, and our custodian? It's extremely important that at this stage, we look to try to identify any pain points that will cause any slowdown in our process and workflow. This increases indirect costs and, of course, places a lot of strain on our operations team that we try to mitigate at this stage. If it clears this test, we'll then move on to an investment memo followed by a follow-up manager meeting. What this memo does is start building out a diligence packet, identifying investment process, investment strategy, philosophy, manager backgrounds and bio in a more thorough and deep written format. And then the follow-up manager meeting allows us to round out any questions we didn't really get to at the initial meeting or something that we still had questions after our document review. We'll then do a final diligence report and recommendation to our alternative subcommittee, followed by a manager presentation. This manager presentation allows for our advisory team and our investment team to really come together and try to identify solutions for our client base and our investment research base. Any questions that we didn't think of as an investment team, our advisory team really has their arms around a client's profile and financial planning goals, and they're able to identify if this product and investment strategy meets those obligations and financial goals. After that, we will debrief, and if we go to a vote, it requires a unanimous approval from all alternative subcommittee members for a manager to be added to our investment platform. So why participate in our program? Well, we offer diversification through opportunities in private real estate, credit, private equity, and select liquid alternatives. We continue to look for new opportunities as they present themselves, and we offer access to institutional grade investment managers and strategies. And last but not least, we also have a long investment partnership track record with investment managers who specialize in the wealth management channel. Thank you. I'm Robert Lopez. If you have any questions, please feel free to reach out to your investment advisory team. Thank you and have a great day.